Now, I would like to explain about financial results in the 9th period ended December 2016. NIPPON REIT achieved operating revenues of 6,836 million yen and net income of 3,054 million yen. That makes for a DPU of 7,800 yen. We achieved upwardly by 5.6% from the forecast of 7,385 yen. On the right, you can see growth in NAV per unit. The graph shows how our NAV per unit has grown rapidly in a short period of time, from 248,482 yen at the time of IPO to 317,932 yen in the 9th period. This is our financial forecast for the 10th period ending June 2017. We forecast operating revenues of 6,915 million yen, which is an increase by 78 million yen from the result in the 9th period ended December 2016. As you see on the right side, there are some factors for the increase. For example, expiration of free rent period and effective rent increase. Thus, we expect a 158 million yen increase in rental revenues. On the other hand, we forecast a 45 million yen decrease in utility due to seasonal factors. As the result, it is expected that operating revenues will not increase so significantly, and we forecast a 91 million yen increase in operating income and an 81 million increase in net income. We forecast that a DPU will increase by 205 yen from an actual DPU in the 9th period to 8,005 yen, which means that it exceeds 8,000 yen for the first time. This page shows our financial forecast for the 11th period ending December 2017. We forecast operating revenues of 6,965 million yen. This means an increase by 49 million yen in comparison with the forecast for the 10th period. But net income will remain at 3,136 million yen, which is the same level with the forecast for the 10th period. In our financial forecast for the 11th period, we are determined that we will renew the contracts with only 80% of the tenants whose contracts will be expired in the 11th period. That is to say, we will project 20% of the tenants to leave during the period. So, operating revenues should decrease, but we expect that operating revenues as a whole remain at the almost same level with the previous period, because the negative impacts are largely offset by positive effects resulted from expiration of free rent period after signing contracts, as well as rent increase. Thus, we forecast a DPU will increase by 1 yen from the forecast for the 10th period to 8,006 yen. In order to maximize unit holders' value, we operate NIPPON REIT by implementing our unique approach called Trinity Management. The Trinity Management brings mutual collaboration and checks between these three sections: the Investment Management Division, acquiring and selling properties, the Asset Management Division that manages them, and the Engineering Management Office that supports both departments from the viewpoints of buildings and equipments. Talking about our external growth, AUM at the end of the 9th period totaled to 65 properties, or 204.8 billion yen on an acquisition price basis. We set 300 billion yen of AUM as medium to long-term target in the period extending from 2018 to 2020. In order to achieve the target, we currently hold the rights of first negotiation for acquisition of 10 properties as pipeline, which are equivalent to approximately 22.5 billion yen on an acquisition price basis. Then I would like to talk about our internal growth strategy. Firstly, please let me explain about occupancy rate of the properties. As of the end of December, the rate reached 98.8%, the highest rate since IPO. This became possible by engineering management to improve tenant satisfaction that we have focused. In addition, we succeeded in increasing rent of 30.9% of leased floor space subject to renewal in this period, This rate was much higher than our expectation to increase rent of 10% of leased floor space subject to renewal. As the result, revenues increased by 3.83 million yen per month. We also strive to develop a new revenue source and reduce cost, and have achieved steady progress. These measures were started in the period extending from the 7th period to the 9th period. Combining completed measures in the 7th to the 9th periods with the planned measures for the 10th period, the implemented measures will contribute to a 150 million yen increase in NOI. As the financing strategy to support these measures, we have been stabilizing our finance status with considering the balance between our financial position and interest cost, so that our external and internal growth will be achieved in a stable manner. If you take a brief look at this graph, you will clearly understand that we achieved growth of 22.5% in a short period, only 2 years between the 5th period and the 9th period. I would like you to see one more thing: transition of AUM shown in a staircase pattern. Since the 7th period, AUM of NIPPON REIT has remained at 204.8 billion yen. On the other hand, DPU has increased by nearly 1,000 yen, from 7,093 yen in the 7th period to 8,005 yen in the forecast for the 10th period. This is the result of our internal growth. Now, I would like to explain about our growth strategies. As managed assets, we currently have total 65 properties consisting of 55 office properties, 8 residence properties, and 2 retail properties. On an acquisition price basis, the assets total to 204.8 billion yen. I would like you to understand that we have continued to hold portfolio with reinforced risk tolerance by maintaining the highest leveled portfolio and tenant diversification among all listed J-REIT. Next is our growth scenario. As our external growth strategy, we will maintain the following acquisition targets set at the time of IPO. Target NOI yield of 4.5%, NOI yield after depreciation of 4.0%, high competitiveness in potential location areas, well-diversified portfolio with reinforced risk tolerance, and high growth potential of properties. We will make efforts to achieve the medium to long-term AUM target of 300 billion yen by 2020. As I said in the previous presentation, we will avoid discount capital increase in principle. We will continue to make efforts to achieve disciplined external growth in a stable manner. The next page is about our internal growth strategy. In order to maintain occupancy rate at a high level, we will continue to focus on leasing activities. Negative rent gap expanded a little from -1.16% to -2.35% between the 8th period and 9th period, because market rent increased and we lagged behind such trends with respect to rent increase. This means that we have a high potential to increase rent further. We will utilize this opportunity to increase rent further to grow our business. In the 9th period, overall rent increase for the 9th period came out in 2.3%, which significantly exceeded the initial target of 1%. As the result, the rent increase deserves the 35 yen DPU increase. In the 10th and 11th periods, we plan to renew contracts with around 120 tenants, many of whose negative rent gaps concentrate on the range between -2.3% and -2.5%. Considering such situation and market environment, we upwardly revised our target for overall rent increase from 1% to 1.5%. Finally, I would like to explain about our financing strategy. We will continue to try to extend the debt maturity period by maintaining the balance with cost. For this fiscal year, we plan to refinance for a term of 6 to 8 years. If this refinancing is completed, we assume that the remaining borrowing period is extended for 2.6 years to nearly 2.7 years.